Hey everyone, coming to you a little out of cadence on a Tuesday as there is just so much activity. I wanted to get an update to you all mid-week. So as we know, interest rates have seen some better days, and Monday, yesterday, was one of the worst trading days. Definitely the worst trading days of 2025, and one of the worst ones we've seen since COVID. And the question really becomes why and what can we see from here, and how can we ensure our buyers and sellers are taking the appropriate steps to ensure maximum return and positioning themselves through this current cycle. So, as most of 2025 has unfolded, mortgage interest rates were on a steady downturn. And it was due to the fact that there was a tremendous amount of uncertainty in market around tariffs. Historically speaking, when uncertainty arises, bonds, which control mortgage rates, become a safe haven. So investors will pull money from stocks, treasuries, other apparatuses, and pile into more long-term debt as it's a predictable rate of return. So in those moments, we typically see mortgage interest rates decline. Well, Friday was the case. Best levels of the year at some point. The 30-year fixed for a top tier individual was at 6.55. And then over the weekend, there's all the talks around the implementation of tariffs, the retaliation from China, and then rumors started percolating that there was going to be a 90-day pause on the tariffs. Well, that uncertainty broke, and we saw some of the wildest moves within the bond market in the trading session Monday that we've seen really one all this year and again since 2020, spiking the 30-year up to at 6.82. And really, it just brings forward that uncertainty is here. It's back. Until we have a clear and definitive picture as to what these tariffs are going to do short and long term, specifically to inflation, uncertainty is here. So with that, how can our buyers and sellers ensure that they're put into the best position possible when evaluating when it's appropriate to lock a rate? So we all know the pre-approval is critical, understanding what your finance position should look like when purchasing a home, but they're really having a proactive dialogue with your mortgage professional to ensure they understand the market, and in turn you do, as the opportunity to lock those windows become very, very small. And especially in moments like this, if someone's not proactively monitoring the market, it really can create a challenge. With that, know that we're here, happy to support. If you've got questions in the body, get on my calendar. I'd love to get time with you. And subscribe. Until the next update, let's make it a great day.